Hello, I'm Jovan Johnson with the IMF Tracker. This week, BOJ expects halt in rapid slide of the Jamaican dollar, calls mount for growth agenda implementation amid record fall in business confidence, and private sector laments limited offering of credits by banks. These stories in a moment, but first, our question of the week. What is the debt ceiling? Stay tuned, the answer comes up at the end of the program. Bank of Jamaica Governor Brian Winter has declared that the rapid depreciation in the value of the Jamaican dollar will not continue for the rest of the 2013-14 fiscal year. However, he noted that the exchange rate is in line with the bank's expectations. It's now costing over $104 to purchase $1. Winter says under Jamaica's IMF program, the exchange rate has to be adjusted as part of efforts to improve competitiveness of Jamaican businesses. The BOJ governor says Jamaica was facing a balance of payments problem, and to fill the gap, funds had to be borrowed from overseas or sourced otherwise. He's emphasizing that there is usually an increased demand for foreign exchange and somewhat less supply at this time of the year. The central bank chief says it is important that the country has a market-determined exchange rate. More private sector groups are joining calls for the government to urgently implement its growth agenda. The Jamaica Chamber of Commerce (JCC) issued its call in light of new data pointing to a record drop in business and consumer confidence. JCC President Francis Kennedy says given that Jamaica's deal with the IMF requires fiscal consolidation, a weakening of the economy is expected. He says the government must now focus on finalizing and implementing its growth agenda with its local and international partners. Francis adds that the country will continue to feel the financial pinch until strategies and programs are implemented to boost the economy. Several factors, including less favorable prospects for income and jobs and the devaluing of the Jamaican dollar, have been blamed for the decline in business and consumer confidence. Local businesses say the implementation of the government's central treasury management system has contributed to tight Jamaican dollar liquidity, restraining banks from giving private sector credit as robustly as expected. The government uses this management system to pull its deposits from banks into a single account at the Bank of Jamaica. It was expected that there would be a boost in domestic private sector credit because of IMF policies forcing the government to contain borrowing. Co-chairman of the Economic Program Oversight Committee, Richard Biles, said because there's a liquidity crunch, the financial sector is being very cautious about lending in order to pay out deposits if necessary. The central management system is expected to become operational in all ministries, departments and agencies by March next year. And to end our program, the answer to this week's question. The debt ceiling is the total amount of money that the United States government is authorized to borrow to meet its legal obligations. Failure to raise the ceiling means that borrowed funds would not be available to pay bills, and the United States may be forced to default on its debt obligations. And that's where we end our program this week on the IMF Tracker. I'm Jovan Johnson.